Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, January the 21st, the year's 2021. Let's talk trading. Stupid kills you with Walmall. So don't be stupid, because these videos are for educational purposes only. Your results may differ from mine and from Walmall. Walmall, what did you do, stupid?
I went and took a trade, and I've now looked at this chart multiple times, and I can find absolutely no reason whatsoever for me to take the trade. And that was pretty stupid to take that trade. I mean, it would sometimes you go and jump into a trade because you're airballing it because there's movement. I can't even find that. I can't find any reason whatsoever, on God's green earth for taking that trade. But I took it. And not only did I do that, but then what happened was, it ran in my direction, and I was actually up a pip or two, and, didn't get out. And then it ran against me. And then on top of that, it came back to break even, not once, not twice, but 3 times. And then it finally went and ran against me. I mean, it was just stupid on top of stupid on top of stupid. So I guess you call that stupid cubed. but it killed me, and I wound up taking, I punched out, with my rules. It was a Walmart trade with my rules. It means that I got to go and get out at 7 pips at worst case scenario, and of course the market continued running against me and got a bad fill on the exit, and so I took an 8.4 loss. So it's like, then what happened was the next 5-6 trades after that, I'm sitting there, in this situation. Not only do I got to make my 10 pips for the day, but I also got to go and make up for the 8.5 pips. So now I got all this pressure on me. I got to make twice as much as I normally have to make.
But you made it though, right?
I did make it, yeah. But the thing is, did I really need to go through that much, trouble and that much, drama in my life, so to speak? Because that's the thing. It's like, and I think this actually brings up a really good point, though. We're human beings, and we're going to do stupid stuff. We're going to make stupid mistakes, and it all points back to the trading plan again. Does your trading plan take that into account? Does your trading plan take into account that you're going to make mistakes, and you're not going to be a perfect person and a perfect trader? Because there is no such thing. We're all going to make bonehead mistakes, and that's just the way it is. And that's just part of trading.
Let me ask you a question here. I'm going to have to put you on the spot, and you have to be honest. Did you?
I don't promise the answer then.
Okay. Did you read your trading plan today?
I'm sorry?
Did you read your trading plan today?
No, I didn't.
Okay. When was the last time you read your trading plan?
The last time I read my trading plan was on Tuesday. So I didn't read it yesterday, and I didn't read it today.
How often should you read your trading plan?
At least one time a day. I like to go and read it at a minimum at the beginning of the day and at the end of the day. That's what I like to do, because one of the things I do at the end of every day is I go back and I look at all of my trades, and what I like to do, if I'm doing things the way I'm supposed to be doing it, and it even says this in my trading plan, that what I'm supposed to do is read my trading plan, and then at the end of the day, go over each and every one of my trades and look for things that I could do better in the future. Look for things where, I took a loss here, but that's because that's what the market did, but I didn't violate my trading plan. Okay, I marked that, in my part of trading plan, yet some people think I'm crazy. But I list all my trades out, and I list out what I won and what I lost. And then what I do is I take a green highlighter and a red highlighter. And the ones where I followed the trading plan, I highlight them in green. Okay? The ones where I didn't follow my trading plan, I highlight them in red. Okay? And the reason why is I want to make sure that I am following my trading plan the majority of the time. I know I'm not going to. I'm going to mess up. That's all of us. But the reality is the last couple of days, I just haven't read my trading plan. And that got me into trouble, because where that trade that I went and took that I took that loss on. The reason why, yes, it was a Walmart trade. Yes, that was a place to go short, but the second rule, in the method says to go and look left. And I didn't look left. I never looked left. And if I would have looked left, I would have said, this is not a good place to make an entry. All it would have taken was literally shift my chart over that half a second move, and it would have screamed at me, do not take the trade. But I didn't do that. Why? Because I was stupid, because I didn't read my trading plan. I didn't remind myself of what I'm supposed to be doing.
Yeah, and I'll disclose too. I did something stupid. Well, I've only been up about an hour right now. I overslept. I guess I needed it. So I came down. Walmart and I were talking, and then he went short right at the beginning of the hour at the Walmart line. And he's like, I think you took some heat on that one. And then you're like, there was no reason to go short because it was the first touch of that line. Well, then you also said it was like it was in a demand zone because he's using the Insanity Industries supply demand indicator. And so what do? 2 bars later, when that's really a wait bar for a long, it came down, it touched the 10 line, and I went short. So then it reversed on me, so I jumped in right here where I should have, and then I had to trade my way out of that because I was in a hedge position. So I think I exited here. It came back. I think I put the hedge back on. It came back. I took the hedge off. It went against me a little bit. And then I doubled up on the short. It came down, and I wound up punching out finally. But it's like, and the funny thing is I've got my new trading plan right in front of me, but I was, like you said, half asleep or 3/4 of the way asleep. Did I take, and the thing is, there's only 3 lines. It says, it's called the consolidation weight. 1, a ball shows up. So here, the ball showed up. Number 2, wait for that bar and next bar to close. So I had waited for this bar to close. Then I waited. I don't think I waited for this bar to close. So there was one that says, and then number 3, it says, unless ball is near a previous ball level. So since this ball was kind of near a previous ball level, I could have gone long either here on candle 2 or here on candle 3. Either one of those would have been a valid trade, and then I could have made 4 or 5 pips without any But once again, I didn't read my trading plan, and I did something doubly stupid.
Yeah. Now, let me explain. Do you still have that chart up?
Yeah.
Because I'll explain why I went short there. The reason why I went short there was because we had a really big, going back about 3-4 minutes before the hour ended, we had a really big push down, and then we had a resting bar there. And then right after that, we then had another push down. And I actually entered 1 minute before the hour even started. And so that's the reason why I entered. So it was a Walmart trade, but it was also because I was seeing that momentum going down. And I figured that, yes, there was some trouble that happened from the previous hour, but that trouble that occurred there was like 2 pips, maybe even about 2.5 pips below the line. So I was getting in a pip or so before the line, and so I figured, well, that gives me an opportunity to pick up 3 to 4 pips. And I was able to pick up 3 pips on that trade because of that. That's the reason why I did it, and the reason why I took that trade was because I followed my trading plan. I looked left. I went and saw what was there. I saw how much room was there, and I said, hey, that's it. That's an opportunity. Could it go against me? Sure, it could. I could have taken a loss there. But the thing is, I had a really, really good reason to go there. And what I also did was when I jumped in it, I went and put my stop loss only 2 pips above where I was at. Now, obviously, my broker probably wouldn't have let me do that, so it was a mental stop loss. So I was only risking 2 pips, to go and get 3, maybe 4 pips. So to me, that seemed like a good trade, good opportunity. Looked left, followed the trading plan. The only thing I violated was I got in a minute early before the hour, which I usually don't like to do. But that's not in my trading plan. That's just something that I just generally do.
Yeah. Now, boys and girls and non-binary traders, remember I just read off my little consolidation weight. trade. So here, we put in a 3 ball. Notice we put it was right at this close level here 2 hours ago. Look at here. Look, there was a ball at this level. And if you look left, you can see 1, 2, 3 times price reversed here. So price came all the way down and this bar was totally red. Well, when it started pushing up, it was green. You could have jumped in right here at 11 and there was an opportunity to take somewhere like 3 or 4 pips if you were quick and not trying to be greedy. So, I mean, in less than a minute, in, out, pips in the bank. And that's, that's the kind of trading that Walmart and I like to do because we just don't like to be in the market for a long time. And usually if we're in the market for a long time, more often, at least for me, more often than not, that's because I'm waiting for the trade to come back so I can get out, as opposed to, hey, I got money in the bank and I'm just going to ride it up and see how much more I can get. Now, we're usually taking our pips off the table.
Yeah, if I'm in a trade for more than 3 to 4 minutes, I can almost guarantee you that more times than not, I'm underwater. So that for me, I just want to go in, and grab the pips and get out. So, I know you like to go, you call it a smash and grab, and that's kind of what it is. I'm just going in, smashing the market, grabbing whatever pips I can get and getting out and not taking on much risk. And by doing that, what's nice about that is, people go and say you got risk and and you absolutely do, and you get risk because this could run against you. Well, yeah, you do have that, but another part of that risk is also time in the market. Because the more time that you're in the market, the more time that you have the potential that the market can run against you. And so for that reason, I just like going in. Hey, I just put $100 in my pocket. Hey, I'm thrilled. I put $50 in my pocket. Hey, I'm thrilled. If I can go and make $50 in a minute, hey, that's a good day. It's like, you could, if you're making $50 an hour, $60 an hour, you think about that across a year, you're making a lot of money.
Yeah, you definitely are. And I just put up the list of indicators. Somebody was asking me about the template, so I just showed the indicators. And I just see that in the tug of war candles, I need to put the toggle switch so I can turn it off, because I was gonna actually, I think what I can do is maybe you can see if I go to properties, and I believe I'm using a bar chart. If I switch back to candlesticks, oh, I think I might have, did I turn the color off? No, there you go. You can see now how these bars look. And actually, I can just go ahead and take that indicator off. So as you can see here, if you look at it this way, it's a little bit harder to see those areas. And that's why I did that tug of war. Because yeah, you've got all these wicks, but it's kind of like you got a wick, then you got a body. And that's like 2 pieces of information your brain has to interpret. And you could say, well, yeah, I could just trade off of here, and you can. It's just for me, those tug of war candles, for some strange reason, it just allows me to see better, especially in this particular method where I'm looking for, taking these trades at the previous hour closes. So here's 1 bar ago, hour close, 2 bars ago, 3 bars ago. So, fellow traders, just remember, being stupid kills you. Fastest 15 minutes of trading is over. So, hopefully, you don't do anything stupid. And I would say the takeaway is, before you start trading, read your trading plan. And maybe before you go to bed, read your trading plan so it burns into your subconscious. And make sure your trading plan tells you to do things rather than not do things. So, it's not what you trade, it's how you trade it. Go out there and drain the banks. This is the Rumpled One, over and out.